Namaskar student, welcome to GDCA College channel. I am Dr. Ashok Jogdan. Today we'll see paper number 2, that is accounts, May 2025. How was the paper and what are the solutions actually. We'll be checking that in proper manner actually. So whatever I am going to tell you, you have to make sure that you will write exactly what the question requires. So not much more than much less, or you can say maximum. So let's get started then.
ध्येय नवीन समोर दिसतय, बँकिंगचं स्वप्न पूर्ण होणार.
GDCA ची साथ जिंकायची ही वाट, यशाची गॅरंटी आता सुरुवात. GDCA कॉलेज
हो भविष्य उज्ज्वल,
GDCA कॉलेज
मिळणार यश.
सहकार आणि बँकिंग करिअर घडवा खास. GDCA कॉलेज देते यशाचा विश्वास.
Let's see now accounts paper number 2. The paper was of 23rd May 2025. What were the question and what are the answers actually? Exactly what we had to write. So question number 1 was about trading account, profit and loss account and balance sheet. We have to make that. So trading account for 10 marks, profit and loss for 10 marks, and balance sheet for 10 marks. So this question carries 30 marks. So what we have to write is whatever things are given, that we have to write accordingly. Number 1 was like about Arnav Cooperative Society. Given adjustments were that about closing stock 26,500, credit side of trading account plus asset side of balance sheet. Depreciation on machinery 10% multiplied by 10,000 is equal to 1,000 minus debit in profit and loss account plus reduce machinery. Number 3, provision of doubtful debts 5% into 28,000 is equal to 1,400. Existing is equal to 800 rupees. Additional provision is equal to 600. Debt, profit and loss. Number 4, prepaid insurance 3,000 rupees. 300 rupees insurance expenses is equal to 1,300 minus 300 is equal to 1,000. Balance sheet asset. Personal traveling expenses 400 rupees minus deducted from capital business travel is equal to 1,800 minus 400 is equal to 1,400. So what will be the trading account and how we can make that? First we have to make the table actually, particulars named debit and particulars credit. Like you can mention debit and credit likewise, or you can mention one by one. That is up to you, like how you do. So I have made that according to the the subject, you can say, or according to the required specification. Trading account for the year ended 31st March 2024. Opening stocks 20,000 debit, purchase 75,000 less purchase return, that is 2,400. So that comes 72,600. Wages 8,400 rupees. So gross profit 47,100 rupees. So total is 1,48,100 rupees. Next, particulars credit sales 1,25,000 less sales return 3,400 rupees. Net sales 1,21,600 rupees. And closing stocks 26,500 rupees. So that concludes total 1,48,100. So this debit and credits are balanced. So what are the calculations for trading accounts? So let's see like what are the calculation and what we can do. These calculations you have to do actually. You will get marks for that as well. For the calculations, whatever calculations you do. Net sales is equal to 1,25,000 minus 3,400. That equals to 1,21,600 rupees. So if we minus 3,400 rupees, so that is coming up to 1,21,600 rupees. Net purchase 75 rupees minus 2400, that is equals to 72,600, that we have minus 2,400 from 75,000 amount. Total debit is 20,000 plus 72,600 plus 8,400 is equal to 1,01,000. So you can see that, as you can see, the total debit is about 1,01,000 rupees and total credit is about 1,21,600 plus 26,500, that is equal to 1,48,000. That is total credit. So from total debit we have to minus total credit. So that is coming up to 4,700. Sorry, for 47,100 rupees. So that is like 1,48,100 minus 1,01,000. So that is coming up to 47,100 rupees. So next we'll move towards profit and loss account. So for the year of year ended 31st March 2024. So particulars, debits and particular credits. Again, we have to make table. You can make tables actually as as you are able to, and like whatever ways you are able to, because tables attracts more thing actually, and it is like very easy to understand, and also for the examiner to understand what you have written the examination. Anyways, profit and loss account is like salary 2,700. Office expenses 2,846 rupees. Insurance 1,300 less prepaid insurance 300 rupees. That is equal to 1,000 rupees. Again, rent 1,800 rupees. Traveling expenses 1,800 rupees. Less personal expense. Personal expenses. That is capital. It will be coming to capital account actually. So that will be 400 rupees. So which will be coming up to 1,400 rupees. Then advertisement expenses. So that is like for 2,400 rupees. Depreciation minus, that is machinery with 10% actually. So that is of 1,000 rupees. Then depreciation means percentage actually, that we have to reduce that one. I'll explain you it later actually. Provision for doubtful debts, that is additional actually. So that is coming up to 600 rupees. So net profit is 33,354 rupees. So what is the total coming up? Like 4,700, 47,100 rupees. Then again, gross profit debt. So you can check here like 47,100 rupees. So which is coming up to, again, total is 47,100 rupees. So what were the calculations for profit and loss account? So straightforward, you can mention actually names in accordance to the in front of all the amounts, but it is not necessary. So you can mention accordingly. So 2,700 plus 2,846 rupees plus 1,000 plus 1,800 plus 1,400 plus 2,400 rupees plus 1,000 plus 600, that is coming up to 13,746 rupees. So from net profit, we got to reduce this amount 13,746 rupees. That is like net profit is equal to 47,100. That is like, here we can see that net profit is total amount minus 13,746 rupees. That is coming is equal to 33,354 rupees. You can see, as you can see, the total net profit is already mentioned here. So how we have calculated. So in this way you can calculate actually. It's up to you how you mention the date, mention the particular name of the amount and all those things. It's up to you. But whatever you write, if you write the correct calculations, you will get correct marks for that as well. Next, balance sheet as on 31st March 2024. So in balance sheet, always remember that balance sheet comes under like divides into two parts, like assets and liabilities. So what are the assets and what are the liabilities you hold, and what are the assets you hold? So assets, like your core assets are like let's take an example: building, machineries, then debitors, and then you can say bank balance, and other things actually that comes under the in the asset. And liabilities, like you can say in liabilities, personal expenses, or you can say personal whatever you think take, that comes under your liabilities anyways, loans or something like that, you can say. uh, so liabilities are like in what is the capital, like in the liabilities there is zero, opening capital is 55,000 rupees, add the net profit 33,354 rupees that we got to add from above here, profit and loss account actually. So again, less personal traveling experience up to 400 rupees, that is we have seen in the previous the trading account actually, you can say, or even in profit and loss account you can see that 400 rupees we have added. Then total is coming up to 87,954 rupees. Then creditors, so those creditors like total have 8,000 rupees, and pay bills, like bills payable you can say, so that is coming up to 6,301 rupees. So total will be 1,02,255 rupees, that is coming into liabilities. And then again we got to move towards assets. What are the assets actually? So building, that costs 29,800 rupees. Machineries cost 10,000 rupees. Depreciation cost is like 10% of the machinery cost, that is like depreciation, that is coming up to 1,000 rupees. Whatever the machinery cost is there, like so let's take an example, 20,000, so depreciation cost will be 2,000 likewise. So 10% of the machinery cost will be depreciation, so it is coming up to 9,000 rupees, where we got to reduce 10,000 1,000 from the 10,000 amount, that machinery cost. Then debitors, 28,000 rupees total, less provision for doubtful debts, that is 1,400 rupees, that is coming up to total 26,600 rupees. We got to minus this amount total 1,400 from the 28,000 rupees. Bill receivable, BR we can say. In liabilities we saw bill payable, so there were bill payable were like 301 rupees. And then here bill receivable are 3,400 rupees. Bank balances 6,655 rupees. And closing stock is about 26,500 rupees, and prepaid insurances of 3,300 rupees. Sorry. So that is coming up to the, we got to add the entire total here. So it is coming up to 1,02,025 rupees. So this is what balance sheet says. So what are the calculations for the balance sheet verification? What we have done in calculations, liabilities like 87,955, sorry 54 rupees plus 8,000 rupees plus 6,301 rupees, that is equal to 1,22,155 rupees. Then assets, how we calculated the assets, like you can mention the name of the a particular asset as well, there is no issue, but if you are not able to, then leave it, you can just make the calculations. 29,800 rupees plus 9,000 rupees plus 26,600 rupees plus 3,400 rupees plus 6,655 rupees plus 26,500 rupees plus 300 rupees, that is equal to total 1,22,155 rupees. So capital is about like 55,000 plus 33,354 rupees minus 400 rupees. So that is equal to 87,954 rupees total. So that balance sheet is balanced. So in accordance to the given parameters, you can say, or given what are the key results in this total question, you can say, like in profit and loss account, in trading account, and in balance sheet account. So key points were like gross profit is about 47,100 rupees, that we saw in the first column, first table, I can say. So then net profit is about 33,354 rupees, that we saw in the profit and loss account. Balance sheet, in balance sheet total is about 1,22,155 rupees, that we saw just in the balance sheet accounts. So closing capital will be 87,950. Anyways, so this is how the closing capital is about 87,954 rupees. So I'm a little bit weak in the account section actually, but as we know that like account student or commerce student can understand this in better way. His next question is about short notes. Second question was about write short notes, any four, which carries 20 marks actually. So, as we know that like, you have to write in a proper manner or to the points in every given question. So that is important. So make sure account, you have to in account you have to mention that entire calculations, that is compulsory actually. So again, first you can see that number one question is about A, that comes into the that was said income and expenditure account. So that is like, what is the income and expenditure account, so that we have to discuss or we have to explain that in that way. So let's take an go through these things, and you have to write accordingly. Again, what will be the answer for that particular question is like, the income and expenditure account is prepared by not-for-profit organizations such as clubs, societies, charitable organizations, etc. Its purpose is to find surplus or deficit by accounting for all revenue income and revenue expenditure for the organization or for a specific period. So what are the features for it? You can write as much as you can. Actually, for it is for 5 marks actually, but it should be to the point. Actually, it should relate to that particular question. So what are the features of it? Only revenue items are recorded. Capital items are not recorded here. It is prepared from the receipts and payments account. Surplus is used instead of profit and deficit instead of loss. Both cash and credit transactions are recorded in the income and expenditure account. So, okay, you can write as much as you can. So, at least write half of the page for the short notes, you can say. So, we just discussed key points here. So, you can write whatever I know. You can make some say long sentences if you want to. Anyways, next question is type of errors. So, in the you can say balance sheet, in the account actually, type of error in accounting you can say. So in accounting there are following errors are found. You can say like first one is error of commission. So you can underline this in examination: error of communication when a transaction is recorded with the wrong amount, wrong side, or in wrong account. For example, recording 2100 instead of 1200. So this is how it founds like error of commission. Then second one is error of omission. That is when a transaction is completely forgotten to the second error of omission. That is when transaction is completely forgotten to be recorded. So we miss. Let's take an example. We miss the transaction. This is one, like we miss the miss to record this transaction 1200 rupees. So that is what it comes like, error of omission. Number three, error of principle. So what is the error of principle is like, maybe in coming examination this question might ask actually explain error of principle or something like that. So we have to write more about it. Violating the sorry what error of principles, violation of accounting principle, for example recording capital expenditure as revenue expenditure. So this is against the principle actually, so that is error of principle. Again, compensating errors, that is two errors that cancel each other but so that the trial balance still tallies. So that is what compensating error is. Error of original entry, writing a wrong amount in the journal or daybook entry. So that is the error of original entry, you can say. So these are the types of errors. Then next, C, valuation of fixed assets. That is like the valuation of fixed asset is done as per AS10. That is, assets are recorded at their historical cost. The historical cost includes purchase price, transportation charges, installation charges, and all the other related expenses. That is depreciation methods. What are the depreciation methods? A straight line method, that is SLM. So what is the SLM? We also will discuss in next video. Straight line SLM, that is, straight line method SLM, equal depreciation every year. That's called straight line SLM. Let's take an example. Depreciation is about 10%. So every year depreciation will be same as 10%. Then next one is written down value method, that is WDV. That is like depreciation decreases every year as it is applied on reducing book value. So that is revaluation. Like, re-evaluation is about when the market value of asset increases, it is revaluate, and the difference in shown in the revaluation reserve. So that is what revaluation is. So this much you can write. So for the valuation of fixed assets. Next, D, computerized accounting. Now, what exactly computerized accounting is? Computerized accounting means recording, processing, and generating reports of accounting transactions with the help of computer softwares like nowadays Tally, ERP, and SAP are the major software used in the industry or in the market so far. So what are the advantages of computerized accounting? In short note, you can write advantages and also disadvantages you can write. So fast and accurate work. So you can write little bit more, extensive sentences. Then second one is automatic reports, secure data storage, then reduced errors. Multiple accounts can be created simultaneously. So you can, that is one of the prime thing actually. So manually you cannot do that. It takes more time actually to do so. Then what are the disadvantages? High initial cost. As you know that Tally softwares nowadays they're much cheaper, but still high cost, high actually. Then requires trained staff. So that is one of the most important thing actually. If you are in accounts, you should first learn Tally, ERP, or SAP, whatever account softwares are there. So that is one of the prime disadvantages you can say. So everyone does not know these softwares actually. So they don't hardly understand the use of the softwares. Anyways, next one is dependent on electricity. So electricity gone, that nothing will work likewise. And risk of data hacking. So this one is prime actually. You can say, see, nowadays data hacking and everything is possible, but still so far it is not that much risky. Still, you can say it is on online, and softwares are there, so you never know. There is a risk, but always take risk to get some good results. Anyways, next one, reserve fund. Reserve funds means an amount set aside from the profit for use in future needs. In cooperative societies, it is mandatory by laws to maintain a statutory reserve fund. As per the Cooperative Act 1960, a minimum of 25% of net profits must be deposited into the reserve fund. Types, what are the types of reserve fund? General reserve fund, you can write what is the meaning of general reserve fund. Then you specific reserve, you can write some sentences for a specific reserve. Then revenue reserve, you can write some specific revenue reserves. What is the revenue reserve fund? Then capital reserve fund, so you can write what is the capital reserve fund. So just types we have mentioned to conclude this video as soon as possible. Next one is investment accounting, AS13. AS13 is the Indian accounting standard dealing with the accounting of investments. Type of investment, what are the type of investments? Current investment, in Types of investments. Number one, current investment intended to be sold within 1 year of span. Then next two, long-term investment that is for a period of more than a year. So before within 1 year you cannot do. And then valuation. What is the valuation for this investments? Current investment is lower of the cost or market value. Long-term investment is the at the cost of the cost price you can say, or cost of the proper share price you can say. Likewise, if you are investing in share, so that much you can do. Then next question was about question number 3 is about was about computer accounts. So the given question was about to create generate computer accounts for the year for 3 years from 2000 to 2003. So that we have we're going to see now. So that carries 10 marks actually. So again we have to make some tables and some adjustments again. So I will see what are the things can be done. Let's see that. Computer account for year 1, that is from the 1st April 2000 to 31st March 2001. So what will be the computer account is date 1st April 2000, particulars to cash, bank to computers, then amount that is for debit side actually, debit side and credit side we got to mention everywhere in the column or you can say in table. So whatever accounts we create here, so for 1 year, for first, second, third year, likewise the debit side and credit side, so you got to create table here. So likewise, so 70,000 was the debit side amount, that comes total 70,000. Then date 31st March 2000, then 31st March again mention 2000 rupee 2000, that is like depreciation is about 10%. So depreciation was given actually there by 10% in the question, so which is coming up to 70,000. 10% is 7,000 rupees. So here by balance, closing balance you can say will be 63,000. So 63 plus 7,000, it is in debit credit side you can see, as you can see 70,000. So it is balanced now. So likewise, then for computer account second year, that is 1st April 2001 to 31st March 2002. So date 1st April 2001 in to balance account. So what will be the balance for the this particular year, which will be directly straightforward, will carry to the first years to second year, like 63,000 rupees will straightforward come into the second year account as it is. So then again we got to calculate depreciation by 10%. So that is for 31st March 2002, then 31st March 2002 depreciation 10%, again which from 63,000 we got to reduce 7,000. This depreciation which is 10,000 rupees, it is for 70,000, not for 63,000, because original amount for 2000 year 2000 was 70,000. So for that only we got to reduce depreciation by 10%. So that is coming up to 7,000 rupees. Then total closing balance will be 56,000 total. So here as you can see 63,000 in the debit side, and credit side again 63,000 rupees is coming. Next, third account, computer account for third year, 1st April 2002 to 31st March 2003. 1st April 2002, then this again second year's closing balance straightforward will come into the action here in third year's 1st April, that is 56,000 rupees in the closing balance you can say. Not closing balance, previous year balance you can say. And then on 1st October 2002, after April financial year 2020 2002 to 2003, in 1st October we got to bank new computer for we got to add into the debit side. So that is of 30,000 total. 56,000 plus 30,000, which is coming up to 86,000 rupees. Then again, depreciation will come into action for credit side here. So 1st October 2002, by bank sale is 25,000. Then 1st October 2002, depreciation for 6 months. So 6 month, why 6 months? From April, you can calculate April, May, June, July, August, September, October. So that is coming up like, for 6 years, 6 month: October, November, December, January, February, March. So for a total 6 years, depreciation will be there from the October to March. So depreciation will be calculated for 6 months only. So that is coming up to 1750 rupees. So how 1750 rupees is coming? So we'll see that in calculation part as well. So what you can do is you can get all the calculation done in first, or you can calculate other things later as well. It is up to you. So whatever ways you are comfortable, you can do that. Depreciation, then again, 1st October 2002, by loss on sale, that is profit and loss account, that is coming up to 1250 rupees. And again, we got to calculate depreciation for 2 computers, that is 31st March 2003. Depreciation for 2 computers will be 3,500. How 3,500? That we can see in the calculation. We will see in the calculation, I can say. 31st March 2003, by depreciation for new. For what? New means like for this new computer actually. So that is for 6 months. So it will be coming for like half for the particular thing actually. So the what will be the depreciation for 30,000 is 3,000, and then half of the 3,000 will be 1,500, like for 6 months. So likewise, in examination, next examination, they might ask for 4 months or 2 months. Likewise, you got to calculate accordingly. 31st March 2003, by closing balance, you can say, will be 53,000. So again, total is coming up to 86,000 rupees total in debits and credit side. Do both sides are balanced. So likewise, so how we have calculated, you can say working or notes. So these carries actually equal marks also. So you got to mention these total notes as well everywhere. Cost of each computers, that is 70,000. We can see 70,000 for 2 computers actually. So that is like we got to divide it. 70,000 divided by 2 is equal to 35,000. Depreciation rate is 10%. Straight line method, that is SLM. That is straight line method means like what? For entire every year, same depreciation rate will be there. Like, for let's take an example that we have seen in the second year computer account, that 10,000, 10% of depreciation for same every year. So that is how it got calculated. 70,000 in same second year as well. So straight line method, depreciation by 10%. Annual depreciation per computer will be 35,000 into 10%. That is coming up to 3,500 rupees only. Total depreciation on both computer per year is 3,500 into 2 is equal to 7,000 rupees. So as you can see in first year, so 7,000 rupees we mentioned here depreciation. In second year also 7,000 depreciation. Then first year 2000 to 2001, opening value is of 70,000. As you can see here, 70,000 was the opening value for the particular financial year. Depreciation value is of 7,000 rupees. That closing balance comes to 63,000. So we got to reduce 7,000 from 70,000. Again, for second year SLM straight line method, 2001 to 2002, opening value will be of closing balance of first year, that is 63,000. Depreciation by again 77,000 rupees. Why 7,000? It is straight line method actually. So it is not WDV. So it is straight line method. That is like same depreciation will be there for the principal amount, you can say. So 10% of the particular 70,000, that is coming up to 7,000 rupees. Then again, closing balance will be 56,000 rupees. Likewise, for third year, how we have calculated, all those calculations are here. Third year 2002 to 2003, sales calculation, 1st October 2002, that is we brought new computer here, you can say. For debit side, our debit side was computer number 1, original cost of 35,000, that is minus year 1 depreciation is equal to 3500 minus second year, that is first year actually, second year depreciation is equal to 3500. That will be of WDV, that in second year, that is in 2002, WDV is added. As we brought new computer, that new rules has come into the play. So what will be the total of this total WDV will be 28,000 rupees. How 28,000 rupees? Let's see. Minus depreciation for 6 months, that is April to September, you can say, that will be of 3,500 into 10% into 6 by 12, that is for 6 month, we got to calculate. So it is coming up to 1750 rupees. How 1700 rupees? If you calculate simple, so the 10% of 35,000 will be the 3,500 rupees, and half of 3,500 rupees will be 1,750 rupees. So it's simple as that. Like people, in coming examination might ask like 4 months, 3 months, whatever months are there accordingly. Book of the book value at the time of sale, you can say, which is of 28,000. As you can see here, depreciation with WDV is 28,000 minus. So we got to again reduce 1,750 rupees as the depreciation for 6 months, which is coming up for 2,600, 250 rupees total. So sales price is 25,000. So again, how sales price is 25,000? We got to see, like, in loss account, on loss sale, that is of is equal to 26,250 rupees minus 25,000 rupees, that is equal to 1,250 rupees. Here we have seen that 1,200 rupees, 1,250 rupees. See here, loss side, actually credit side, profit and loss account, you can say. Then for third year depreciation calculation, how depreciation has been calculated. So this is how we can see now. 31st March 2003, computer number 2, annual depreciation was 35,000 rupees by 10% is equal to 35,000. So new computers for 6 month depreciation, 30,000 original cost by into 10% is into 6 by 12, actually, that is coming for up to 1,500 rupees. So how 1,500 rupees? 10% of 30,000 is 3,000 rupees, and half of the 3,000 is 1,500. For 6 months we got to calculate that from April to September. Again for third year closing balance, how closing balance is coming up. Computer number 2, 28,000 rupees minus 3,500 is equal to 24,500. Here, as you can see, 24,500 is coming for the in the account. So new computer will be 30,000 minus 1,500, that is 1,500. What is the 1,500? It is depreciation for 6 months, actually, is equal to 28,500. Total closing balance will be 24,500 plus 28,500, that is equal to 53,000 rupees. So this is amount what is coming for total closing balance is 53,000 rupees for 3 years, you can say. Last year, third year's closing balances. So as you can see here, closing balance is 53,000 rupees. Here you can see as on 31st March 2003. So this is what it is. So then question third B was for to make simple cash book, actually. So debit side, that is recipients. Sorry, debit side, that is receipts, and credit sides, that are payments, actually, to credit in the accounts. So for as on a given question, in January 2024, it has asked actually to make the simple cash book. So how it is gonna be? 1st January to capital 25,000, 5th January to bank loan 15,000 rupees, 12 January to sales 15,000 rupees, 31st January interest from bank 1,900 rupees. So that is equal to 56,900 rupees. Again, we got to see working how these calculations are coming. Then say for 2nd January purchase, by purchase 20,000 minus 10% depreciation, you can say. So 10% of 20,000 is 2,000 rupees. We got to reduce 2,000 rupees from 20,000. It is coming up to 18,000 rupees. By drawings, 5,000 rupees. By shop rent, 3,000 rupees. By salary, 4. These are the credit, actually, payments side, you can say. Uh, by salary 4,000 rupees, by closing balance that is coming up to 26,900 rupees only. So total it is balance 56,900 likewise. Working notes for a particular question actually. So you can write according to as you understand the question. It is not necessary you have got to write according to my method only. So you can apply your method as well. It is up to you how you can calculate that things. So trade discount, it is to 20,000 is into 10% for on purchase actually. So we got 2,000 rupees discount. So that straightforward 2,000 will get minus from 20,000. It is coming up to 18,000 rupees. That is net purchase amount is to 20,000 minus 2,000 rupees, which is 18,000 rupees total. Note, trade discounts are not recorded in the book, only in the amount is recorded, only net amount is recorded actually. So then again, total receipts. What are the receipts actually? Here you can see in the receipt part actually 25,000 rupees here. Total, these are on debit side actually. Total receipts 25,000 plus 15,000 plus 15,000 plus 1,900 is equal to 56,900 rupees total. And total payments that are on credit side, payments are always on credit side, receipts always on debit side. 18,000 plus 5,000 plus 3,000 rupees plus 4,000, that is equal to 30,000. So how closing balance is coming 26,900. So we got to reduce 56,000, reduce 30,000 from 56,900 rupees. That is like closing balance. 56,900 minus 30,000, that is equal to 26,900 rupees. So this is how working is. Question number 4, that carries 10 marks actually. These all question carries 10 marks. Bank reconciliation statement as on 31st December 2024. So particular was given actually. So what are the things in the examination or in the question? So we got to write again. We got to make the table. In accounts, you have to make tables everywhere, wherever it is asked statement, wherever it is asked closing, calculate the computer account, sales account, profit and loss account, balance sheet, everywhere you got to make table actually. So make sure in accounts paper you got your scale to draw the proper linings and all. So again, yes, let's see particular add that is like plus account and less, that is minus account. So cash book balance is debit balance you can say, so which is of 5,000 rupees. Then add checks issued to other but not yet presented to bank, that is of 1,500 rupees. Add amount directly deposited into bank by customer, that is of 800 rupees. Less, that is in the that comes into the less amount, minus account. So that is of check deposited into bank but not yet credited, that will be of 2,000 rupees. Then less bank charges only in the passbook actually, that is of 3 rupees. So passbook balance adjustments balance is 5,270 rupees. So how this calculation will is coming. So we got to see that working notes here. Working notes you can say, or calculations you can write. So everywhere, wherever it is required or wherever table is coming, so you got to write your calculation. You got to write working notes there every time. Cash book balance is equal to 5,000, as we can see here. Cash book balance is 5,000 rupees plus account that check not yet presented to the of 1,500 rupees, that is CB less PB but not yet reduced, plus direct deposit by customer, that is of 800 rupees, that is here you can see 800 rupees. PB more, not in closing balance you can say. Subtotal is of 7,300 rupees total. Minus we got to reduce total amount here, whatever amount is said here, that is 2,030 rupees, that is check not yet credited 2,000 rupees. CB more, PB less you can say. Bank charges PB only, that is PB is passbook actually. So that is of 30 rupees. PB less, not in the closing balance. Passbook balance is of 5,270 rupees. So these are the working notes. Next question was about bill of exchange. Actually, the given parameters were there actually, and so from that we got to create a bill of exchange. You can see here format actually. So this format you can do. Uh, so you can mention place Lohgaon, Pune, date 3rd of February 2024, date of drawing. Amount that is of 5,000 rupees in words. That is, you have to write everything actually how you can make the bill of exchange. 5,000 rupees only. Only you have to mention everywhere, or these tasks are required actually. So this seems to be in, if you go in bank, if you deposit check or if you sign check, you always do that only or slash and dash. 2 months after receipt of bill, pay to Sri Rahul Shinde, Nashik, or his order rupees 5,000 only, that in words, and in numbers 5,000 only for value received. To Sri Sujit Kale, Latur, bill acceptor or drawee, you can say. Bill drawer, you have to write bill drawer Sri Ajit Patil, Lohgaon, Pune. Who is the bill drawer? Ajit Patil from Lohgaon. Acceptance, accepted date 27th February to 2024. Acceptance due date 27th April 2024. That is after 2 months of the acceptance of the bill of exchange. Accepted Sujit Kale Latur, drawee or acceptor. So parties in the bill of exchange, what you have, you can mention that as well. There is no issue actually, and you can mention the how you have, how did you did the bill of exchange. Part of the bill, name and address you can mention here. Drawer, that is Mr. Ajit Patil. So it is already given in the question actually. You got to write that in the answer as well. Drawee or acceptor Sri Sujit Kale from Latur, Mr. Ajit from Lohgaon actually. Payee Sri Rahul Shinde from Nashik. Amount 5,000 rupees. You can write in words 5,000 only. Date of drawing 23rd of February 2024. Acceptance date 23rd of February 2024, and due date is 27th of February 2020. Sorry, 27th of April 2024. That is acceptance plus 2 month actually. So that is how it is gonna be. Question number 5A is true or false. Actually, it was asked if that the statement is true, why, or explain it, or if it is false, why it is false, explain it. So number one, the statement is debenture holders are the owner of the company. So that answer is false. Actually, all questions are false here. Actually, answers for all questions are false, but you have to mention reason why. Debenture holders are creditors, lenders of the company, not owners. They lend money to the company and in return received a fixed rate of interest from the company. The real owner of the company are the shareholders, members who holds a share in the company's capital and receive dividends from the profit. So that reason it is false actually. Number two, the drawer of a bill is the same as the drawee of a bill. So again, the answer is false, and reason why: the drawer and the drawee acceptors are different, two different persons. You can say the drawer is the person who draws the bill, the creditor, and the drawee is the person who on whom the bill is drawn or debited. You can say who accept the bill and makes the payment. Next, balance sheet is an account actually. So this is not account. As you can see that balance sheet is a statement actually. We can see our document that we have already seen in the previous question. You can say first question I can say. So first we saw the trading account, then we saw profit and loss account, and then balance sheet. So balance sheet is not a account. It is statement or document. You can say reason. Balance sheet is not an account actually. So yes, we discussed. It is a statement or document. It shows all the assets and liabilities of the organization as on the specific time period or date. It is used terms like assets, liabilities instead of debits and credits. So in balance sheet, always, as I told you already, in balance sheet, it is always assets and liabilities. Assets of the company, on liabilities of the company, on company action. Number 4, preparing a cost sheet is mandatory by law. So this statement is again false actually. Why? Reason: preparing a cost statement, that is cost sheet, is not mandatory by laws. It is prepared voluntarily for the convenience of management. Through it, the cost of production can be calculated and cost control becomes possible actually. So, but it is not legally compulsory for anything. Number 5, in the written down value, that is WDV, which that we have seen actually. Two methods, the WDV and SLM actually. SLM, straight line method, and then another one is written down value, that is WDV method. So WDV method is the annual depreciation remains constant. As you know that already we discussed in the question number 2. I can that there it was SLM, that is straight line method, and here it is not. Straight line method is like the depreciation consists same, remains same actually, and in WDV it is not same. It is varies actually every year. Uh, why? Reason: in written down value, that is WDV, reducing balance method. Again, this is new term actually, reducing balance method, or modernist term, you can say. The amount of depreciation decreases every year because depreciation is applied on the remaining book value in the fixed installment straight line method, that is SLM. SLM, just we saw that depreciation remains equal each year as it is applied on the original cost that we have seen in the computer account. Just we create that one. So these are the 5 questions for the true or false, and this carries 2 marks. Each question carries 2 marks, and that is entire question is of 10 marks actually. Question 5B, match the pair, that carries 5 marks. Actually, you can write all the questions, whether it is correct or not, but make sure you write correct answers. Group X, Group Y are the answers. Number 1, trade accounts, that is, you can say trade account, the pair was F, not recorded in the cash book. The Ashok account, yes, here my name was there in the question. Sri Ashok account. Personal account, because as it is the name of the person, you can say it is personal account. If here it was mentioned, suppose let's take an example, XYZ company or something like that, XYZ society or something like that, so it is always come as a current account actually. So father of computer, who was the father of computer? Charles Babbage is the father of computer. Interest account, nominal account, and discount received, D, it is shown on the credit side of the profit and loss account. Discount, yes, that is very important actually. Discount always in the profit and credit side of the profit and loss account. So what are the explanation? How you can mention here explanations as well. These are very good actually if you are able to. Trade discount is received at the time of purchase out. It is not recorded in the book. Only in the net amount is recorded. Only the net amount is recorded actually. Sri Ashok account is the account of person, hence it is personal account. Charles Babbage is considered as the father of computer. Interest account is the nominal account because it records income and expenses. Discount received is an income, so hence it is shown in on the credit side always in the profit and loss account. So that's it. The for account actually. So this was the exact paper we had to solve, but I don't know like how many people have solved it in this manner or in that proper manner. So it seems like very easy actually, but again it's exam, so you cannot predict anything. So for all the account students, you are able to understand. If you are not, then call us, actually we'll make you understand that as well. So all the best for your GDCA examination May 2026. So that's what we have seen so far. So how to solve the questions and make sure that your calculations are correct. So again, one of the important point is you can write in English. You can again, one of the important question, whatever work you do, in between or for every example, so you can you will get marks for that. So make sure that you will write exactly what it requires. So whatever work you do and in paper, that will get marks as well. So calculations should be perfect, or make sure that nearby calculation will become. So next video we'll see about accounts. What are the important questions which will be coming in the examination 2026, May 2026. So stay tuned then. Sharing you some of important questions based on the examinations so far held. So if you like this video, share with your friends who are appearing for the examination May 2026. So might helpful for them. And again, in next video with the important questions about accounts which will be expecting in the examination 2026. So till then, to our channel. Namaskar.